After an absolutely amazing earnings out of SoFi and an amazing guidance for 2026, SoFi decided to crash. And here's how I'm going to be playing SoFi this week. And if you drop a comment down below, you're going to get my new ebook called The Snowball Method, completely for free, no strings attached, no opt-in, nothing like that. Just drop a comment down below. I'll send that over to you. And while you're down there, I would really appreciate you hitting that like button and that subscribe button. And of course, I hope you're having an absolutely God-blessed day, guys. But today, we are doing a follow-up video to SoFi because this week is going to be big for SoFi, okay? Especially us as option sellers. And I'm going to show you guys a couple of the strategies that I'm going to be deploying on this SoFi strategy. So let's get into it. So I'm going to quickly minimize myself. Obviously, guys, go do your own research. Just because I love SoFi does not mean you should be loving SoFi, but let's just be real. Let's just be real. First $1 billion quarter, 1 million users added right in their last earnings, and a strong guidance for 2026. Here on our picks, we could see the return on collateral has absolutely skyrocketed, about 33.57% return on our collateral, even on the 21 strikes. I can't believe that we're about to see maybe SoFi here dropping below the 20 level, right? So right now we're seeing SoFi trading at 2281, right up below the 50-day moving average, right at the 200-day moving average. This is going to be this is a massive support level. You guys know I love paying attention to the 50-day, 200-day, and the 300-day moving average. We're going to see, are we going to dip below and stay below that 200-day moving average? If we do, right, the next stop is going to be the 300-day moving average, which is at 19, call it 20. And then are we going to drop below that? I don't know about you personally. Obviously, I'm not a financial advisor. I'm going to be riding SoFi down on this wave. That is for sure, because I believe in this company. I use this company every single day. I love what they're doing. I love their marketing. I love their funnels, and I'm all about that. But heavily oversold also. So quickly looking at the chart, let's go quickly go over to our Yahoo Finance right here, right? So what we're seeing, right? What are we seeing right now, right? So let's be honest. SoFi has had a very good run recently. There's no question about it, really, since the summer, and it really has absolutely taken off. Is it kind of priced for perfection? Sure. Does it warrant this absolute, massive correction that it's kind of seeing? In my opinion, no. And in my opinion, I think this is a massive opportunity for us option sellers, and at least just for me specifically, right? Do your own research. And let's be real, right? SoFi, we haven't had much opportunity here to get like ideal setup cash secured puts. So for me, what I like to do when I'm doing my cash secured puts, if you don't know what a cash secured put is, basically all I'm saying is I'm going to go over to the options chain here on SoFi, and I'm going to click sell a put. All I'm saying here is I'm willing to buy 100 shares of SoFi. That's it. And I get to pick my date. So in this case, I'll just go out about a month, March 6th. I'm willing to buy 100 shares of SoFi on March 6th. And the cool part about it is I get to name my price as well, right? So as I scroll down here, I can pick 22s, I can pick 21s, 20s, and so on and so forth. Now, obviously, the lower the strike is, the stock price is that I choose on my contracts, the less premium I'm going to be collecting. So for example, if I choose the 21s right here, and I click into this contract, right, you could see I would collect just about $75 of premium. This $75 is coming from the options buyer. So let me go toss this into my cash secured put calculator. My calculators are free. Just attend the Ark Options Strategy workshop. It'll be the first link in the description of today's video. You can get my premium calculators as well as my trade log template here completely for free at the very end of that training. So here's how the cash secured put specifically works, okay? So in this case, I'm saying I'm willing to buy 100 shares of SoFi for $21 on March 6th. And I'm collecting $75 between the bid and ask spread, $75 of premium. Now, I do have to lock up $2,100. Every options contract, as you see here, is equal to 100 shares. So I need to have cash covered. Everything I do is covered or cash secured, right? So 21 times 100 is $2,100. And so I'll put my collateral here as 2,100. And you can see here, I get a 3.57% return on our money. Same exact setup that we saw here, on the ArkPicks.com. With that said, is this a risky trade? Yeah, I would say so, right? Because there's a higher chance of assignment. And the easiest way to kind of gauge your risk of assignment that we use as option sellers, I personally look at return on collateral, anything over 2.5% and above, and this being at 3.5%, consider this as a high risk play. That's how I do it. But a lot of people like to also look at the delta. And the delta here you can see is a 0.28. 0.28 meaning, let's just call it 30 for simple math, 30% chance that you're going to have to buy SoFi on March 6th, or I'm the kind of guy that likes to look at it as a 70% chance that I'm not going to have to buy SoFi. But either way, for me, I don't care if I'm getting assigned SoFi at 21 because I love this stock and I actually don't mind lowering my cost basis on it. With that said, 20 to 21s, right? Getting a 30 delta on that, right? That is the cash secured put play. Now, what I personally like to do along with my cash secured puts, and actually before we jump into the next thing, the risks, because I want to make sure that everybody understands the full risks of this strategy. The first thing that can happen, right, is let's say on the 6th that rolls around at close, SoFi is trading above 21. Well, you're not buying the 100 shares, right? Because it's not trading at 21. Cool, right? So you simply walk away with that full premium you collected. Your $2,100 is released, right? And you get to go run the play on another opportunity, collect some more premium, rinse and repeat. Welcome to the world of selling options, baby. It's freaking awesome. But the second thing that can happen, and this is the big risk, okay, is that let's say that SoFi is trading at 20, 19, 18, right? On the 6th, right? You're on the hook to buy those shares. You're going to be assigned at 21, but let's say SoFi is trading at 18. That's the big risk of it, okay? You got to weigh that for yourself, okay? But here's the second step of this strategy, okay, that I'm deploying. So number one, I like to do I'm getting in a lot of cash secured puts this week, that's for sure. I usually do, for the most part, like to wait to see for the dust to settle a little bit, especially when the stock is plummeting. However, being so bullish on SoFi, I want to start getting assignments. I want to start grabbing and striking down. So how I'm playing it? Well, around the open, usually an hour after open, I'll place my trades most likely for the 21s. And if we continue to drop further down, I'll ladder step my way down to the 19s. All right, then I'll go down to the 17s and so on as we continue to drop. All right. Now, again, I want to make sure I'm striping this across a few contracts. I'm not just going to go and do 20 contracts or 10 contracts, at the 21 strike. No, I might do a couple of contracts here, a couple of contracts for the next strikes, and that way I'm kind of lowering my cost basis. But for me, the setups, the fundamentals haven't changed, guys. The fundamentals of this company, if anything, the fundamentals have gotten stronger, right? So to me, this is just, I'm not all in by any means. I don't believe going all in on anything, especially in the stock market. But for me, it's just like this screams opportunity. Get a sip of this coffee. I hope you guys are having a good Sunday here. But man, I'm going to take advantage. I'm going to take advantage because we have not seen a pullback like this on SoFi in a very long time here. So that's what I'm going to do. I'm going to ladder step my cash secured puts down. The second thing that I am considering doing is I'm considering to immediately buy more shares. Not something I normally like to do. Okay. I don't normally like to just go out there and buy 100 shares, but this strategy I think is really good, especially if you love a stock anyway. So here's how it works, right? So what you would do is you would come out here to your whatever your brokerage you're using, Robinhood here, and you would buy 100 shares of a stock. So let's just say you buy 100 shares of SoFi at $22. Let's just say $22 for simple math here. Okay, now we'll go to our covered call calculator and we're going to say purchase strike price. That's your cost basis. You bought 100 shares for $22 average cost basis. Now what we want to do is we can put those shares immediately to work. Immediately. We don't just let our stocks sit. That is not what the kind of trading that we do. We use our assets kind of like rental properties, where you buy a rental property, you're not just hoping for appreciation, you fill that thing with a tenant as well, right? So that's exactly what we're doing in this situation. We got our 100 shares or 200 shares, 300 shares. Remember, you need at least 100 shares with every options contract. And immediately we put them on the market and we say we're willing to sell them for a certain price on a certain date. And for a certain price. Did I say that already? I don't know, guys. It's Sunday. Let's get it. So we're going back to the options chain. We're not no silly options buyer. We're selling a call. Now what I'm saying here is I'm not going to buy 100 shares. I'm willing to sell 100 shares on a certain date. So I could do weeklies and I could do monthlies. By the way, guys, I'm mixing and matching here this week, and that's how I do a lot with SoFi anyway. I do monthlies. I do weeklies. I'm scattering all around. Whatever floats your boat, obviously, for your strategy. So here I am about 30 days out, and let's say I just bought my shares for a $22 average cost basis. And you know what? If it trades up to $25, it's trading at $25 at close on the 6th, I am okay selling those shares. Now for that, you guessed it, I'm collecting some more of that juicy premium. Now in this specific case, it's a fairly wide bid-ask spread. Always be careful. You know what? That's what's helpful with Ark picks. It will flag actually my setups here for me, especially when there is going to be a wider spread, because I'm not giving up no juice to those silly little options buyers, right? I got to pay for their Christmas card somehow for all this premium they're giving me. Jokes aside, though, always check your bid-ask spread, guys. Cannot stress it enough. SoFi, fairly tight bid-ask spread, so not as much to worry about. You can see it's not flagged here, at least on arkpicks.com. But coming back, so in this case, fairly bid here, at least on the call side. So right here, I'll do like, let's just say, assume we'll get filled around like $83. Let's say $83 of premium. Go to the cover call calculator. Again, all of these are free. Attend the Ark Options workshop down below. So we're collecting $83 of premium. Our strike of the option, right, is what? We're saying we're willing to sell it for $25. Okay, $25. We'll put our strike of the option there. Boom. Okay. So that's what the trade would look like. We get a premium return, almost 4%. How am I getting that? $83 divided by $2,200, right? That's your asset value, right? That's your average cost basis. That's how we're getting that number. If we end up having to sell our shares, we'll capture an additional $300 of appreciation, right? That's the difference between buying at 22 and selling at 25 for a total profit on this trade of 383, or a max total return on this trade of about 17.41%. Why do I say max? This you have to be comfortable with, that this is the max amount of money you can make with this specific trade. Because let's say the 6 rolls around and SoFi is trading at, 24, 23, anything below 25. Obviously, your shares aren't sold because it's not trading at 25. Wow, complicated. But the second thing that can happen, and this is the big risk of the covered call side, is let's say it's trading at 26, 27, 28, 30, 35, all-time highs. Let's go, SoFi. You are on the hook to sell your shares for $25. Now, there's strategies to kicking the can down the road I call that rolling. That you can sometimes do that, but usually you want to do that for a net credit, at least me personally. And that's a little bit more of an advanced topic. But those are my 2 big plays that I'm going to be doing. And I usually, what I like to do when I'm doing my cash secured puts on my covered calls, this is called a covered strangle. We like to call it the Pete strangle. But I do both of those on the same exact expiration and for roughly the same exact deltas. So if you want these premium calculators completely for free and my full trade log template, click the first link in the description of today's video. That's going to take you to the Ark Options workshop. 90 minutes of training, perfect if you're just getting started with the wheel strategy, Ark Options. I try to break things down in plain English, as you know. So if you like this sort of stuff, obviously make sure to attend that. And at the end, I give you all these free resources so you can start using, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.